The expected pullback in the S&P into around Thanksgiving is over, and higher prices are now likely. Today's November 30th, and happy Thanksgiving. We have been watching a very strong market unfold, and it's likely to continue somewhat higher. We anticipated the next wave to go up into the early part of December, between the 9th and 13th was what we were expecting. And now we're basically fine-tuning what we were looking at and looking at several shorter-term cycles which are really been repeating quite well to anticipate, to give you a forecast for what's likely to happen going next. This is primarily for swing traders. And the reality of it is there's a 4-month cycle in the market, been repeating really, really well. And you can see this picture shows how it has been tracking the market for a number of months. And it didn't have much of a dip either around Thanksgiving. It did have a little dip. And then we have a rally continuing until roughly the 8th or 9th of December, based upon that one cycle. And then afterward, the market basically goes kind of sideways, possibly a little bit higher, but not much, until as late as the 18th or 19th of December. Then it falls fairly sharply down into Christmas. But again, it's not a new trend. It's not a new bear market or anything. It's just a pullback. And then after Christmas, we could continue higher for a week. And then in January, we're expecting potentially a little pullback and a big rally earlier, a little pullback early in the month and a big rally into late January. Okay. Remember the context. We are doing cycle work, which is not the same as what is usually done, assuming that the cycles are sine waves, and also limiting it to 1 or 2 cycles, because that isn't the way it actually works. Because numerous cycles are always there at the same time. And what we found is, right at the moment, the big picture, just to keep you in line with what we've already said, it should look a little bit like 1986, because 1986, the 38-year cycle, is one of the foremost cycles that's running in the stock market. And it turns out, if you look, there was a November 20th low in 1986, a December 3rd high, and then it basically went sideways to down into Christmas, into the end of the month, and then it took off. We don't expect the exact same behavior, but something similar, where December is kind of a lackluster month, where it makes a high, and then it kind of chops around a little bit, has a little pullback, and then in January continues the upside. So the details further are, there's other cycles that are running. One of them is the cycle of Mercury combustion. Turns out that Mercury has a habit, because from the viewpoint of the Earth, it looks like it's running into the sun roughly every 2 months, and it's going forward, and then it passes the sun, and then it seems to go retrograde, runs into the sun again. So when it hits the sun going forward, it's called combust. When it hits it going backward, it's called retrograde combust. Right now, Mercury is retrograde, approaching the sun on the 5th of December, and it has a habit of having pullbacks from that high point. You can see in this chart, every one of the blue arrows indicate a point where Mercury was retrograde and combust, and in each case, the market took a dip. Some were bigger, some were smaller, but in each case, it was fairly consistent, and we're going back here almost 2 years. So we would expect the rally in the market to continue this week until the 5th or 6th, and then start to pull back next week on the 9th, 10th, 11th, that few days, and then go back up again and play games until the 18th or 19th, possibly making a new high. The highest price we're expecting is probably around 6,200, and more than likely it will stop around 6,150 on the way up, and that could happen around the 5th. So we're being very specific about the prices, because there's a clear channel, as you can see in this chart, that the market has been making highs along this channel. And if it does make a low along the channel around Christmas, it would come back to around 5,900 before resuming its merry way upward in January. So in this chart, you see those white dots on the bottom. Those are the dates, and they're approximately 26.5 days apart, where the moon runs into the south node of the moon. And all of the occurrences prior to this most recent one were very deep corrections. This time, it only came down a tiny bit. It's a sign of a great deal of strength in the market. but the time point did come in the right place. Also, we've been mentioning the 49-week cycle, multiples of the 3 times the 49-week cycle 147 weeks ago, and that required the market to have some sort of a dip into Christmas, which hasn't happened yet, and we still expect there will be some weakness toward the end of the month in the S&P. And also the 54-week cycle has been working, and it's been doing so upside down, and it also calls for a low point in the late part of December, early January. But it's a minor low. Now, we did mention the 38-year cycle and the 88-year cycle in our prior videos. So we're looking for a rally the early part of 2025, probably a pullback in the middle of 2025 around April, and then another rally up and possibly the highest price of the year in August of 2025. So it's not a bearish scenario going forward. There will be potentially a bear market coming after that. And if it does happen, it would go on in 2026 into early 2027. I also wanted to bring up, we're going to be having a Trade Forecast Mastery Masterclass soon. It's a 13-week program in which we cover the basics of our proprietary technique for discovering which parts of history are actually repeating. It relates very strongly to W.D. Gann and to the material that I learned back in the 1980s from Jerry Bomring. Dr. Bomring was a famous Gann expert. We also have several techniques that are given. They're mechanical trading techniques. One of them is called the momentum balance technique, which has been a very effective and simple to use system for predicting price objectives and for developing trades which are low risk and high potential gain, and you know before the trade begins whether or not the return to risk ratio is good. And also a 6-point system, which is a mechanical system as well, delimiting precise intraday high and low points, potentially also intra-month high and low points, and intra-year high and low points, based upon the same formula expanded into different time frames. We also clarify some of the most significant cycles that are available that actually run the show for a lot of markets. And it makes it so much more satisfying when you see that this particular cycle is coming in as expected, and it's also coming in the same way it did 2 years ago or 7 years ago, whatever, and you knew where to look in order to find it. It's a beautiful thing to see history repeating, and particularly anticipating which part of history is likely to be repeating right now. Inside of the 13 weeks, the first 4 weeks are the basic course material. They're 2-hour sessions on Zoom, and they're recorded, and you have access to those recordings. The next 9 weeks are called clinics. At that time, you join a larger community of students that have already taken the class, and we continue to go into new material. It seems like after the 13 weeks, we still continue to learn new things ongoing, and many of the students are extremely satisfied with these clinics.